Welcome to the Deep Dive. We're here to cut through the noise and get you truly informed. Today, we're jumping into a really dynamic space. It's buzzing with innovation, but also, let's be honest, some pretty wild swings. We're talking about that fascinating crossroads where Bitcoin mining meets AI and high-performance computing. And our mission for this deep dive is pretty clear. We're going to unpack the strategies, the financial health, the growth prospects of two key players you should know about. CIFR mining, that's CIFR, and Energy, IREN. We've got a stack of financial reports, market analyses, industry insights, stuff you, our listener, provided. We're going to sift through it all, give you the real story, and help you get, genuinely well informed.
Exactly. And at the heart of it, really, is this core challenge these companies are grappling with. How do they thrive, not just survive, with Bitcoin prices doing what they do and after the halving? That event cuts mining rewards, making things tougher. And at the same time, how do they cash in on this, frankly, booming demand for data centers, which is just being relentlessly driven by AI? We'll look at how their quite different approaches are really shaping where they're headed.
Okay, so let's set the scene a bit. We've got CIFR and IREN, both significant names in Bitcoin mining. They've built reputations around energy efficiency, often using renewables for their data centers. So on the surface, maybe they sound kind of similar.
They might seem that way, yeah. But here's where it gets really interesting, that fundamental split in their strategies. CIFR, well, they've largely stayed focused on expanding their core Bitcoin mining, really doubling down there. IREN, though, they've made a much more aggressive pivot towards AI and high-performance computing, HPC data centers. They're building effectively dual revenue streams, not putting all their eggs in one basket, so to speak.
Wow, okay, that is a completely different path for each. So what's driving that split? Is it just this huge data center demand, or are there, broader crypto trends pushing them in these distinct directions?
It's likely a mix of both, I think. The AI demand is undeniable, but crypto market dynamics definitely play a role too.
All right, let's talk about what everyone wants to know. The money. Let's unpack their financial performance, starting with revenue. CIFR Mining, CIFR. Q2 2025, they reported revenue just over, what, $43 million?
$43.57 million, yeah.
Okay. But they're actually projecting some pretty deep net losses, potentially reaching hundreds of millions by 2028.
That's right. It really shows how their profitability is, challenged. Things like high energy costs, equipment depreciation, it all adds up. Even though, to be fair, they do benefit from low debt in that joint venture with Canaan for efficient mining rigs.
So how does IREN compare on the financial front?
Well, the contrast with Energy, IREN, is pretty stark here. They've delivered significantly stronger results, quite frankly. Q3 2025, IREN's revenue shot up to $148 million.
$148 million.
Yeah.
Wow.
Yeah, it's a massive jump. That's 24% up quarter-over-quarter, and an incredible 326% year-over-year.
Okay, and what's driving that kind of growth?
It's fueled by both their mining operations and, crucially, their AI cloud services. Now, their overall profitability score, it still shows room for improvement, sure, but their earnings per share, the EPS, actually beat expectations for the full year 2025. So that pivot, it seems to have really paid off for IREN. It even helped resolve some past legal risks, like a $20 million settlement they had with NYDR.
Right, the Bitcoin financial services firm.
Exactly. And analysts are noticing they're mostly rating IREN a buy, with price targets suggesting, decent upside from where it is now. CIFR's implied upside, based on current analysis, looks much more moderate.
Okay, so putting this all together, it sounds like IREN has a clear edge on revenue growth and diversification. Their balance sheet just looks more robust because of that dual strategy. And CIFR's projected losses really underscore its vulnerability to, the inherent volatility of Bitcoin's price.
That seems to be the story the numbers are telling, yes.
Now let's talk about their actual footprint, their market share in the global Bitcoin mining game. The U.S. is still the top dog for mining in 2025, right?
Yeah.
Total hash rate, the computing power, was around 943 exahashes per second back in May. How do CIFR and IREN measure up?
So CIFR is currently operating at about 13.5 EHs. They have plans to scale that up, aiming for 23 EHs by late 2025.
Which could potentially double their Bitcoin output.
Potentially, yeah, if they hit that target. But even then, you have to remember, this still represents less than 3% of the total global hash rate. Their efficiency, though, how much energy they use per computation, is competitive, around 19.2 joules per terahash.
Okay, and IREN, how do they compare operationally?
IREN's approach is different here, too. They'd already hit 35 EHs by March 2025. But crucially, they plan to cap their Bitcoin mining expansion at 52 EHs.
Cap it. Why?
Because they're strategically focusing further expansion on AI. It's a deliberate choice, and it shows in their performance. In July 2025, IREN actually produced 728 Bitcoin.
More than Marathon Digital, wasn't it?
It was, yeah. They surpassed Marathon, which is a much larger player, mainly due to superior fleet utilization, essentially getting more bang for their buck from their existing machines. So in terms of actual Bitcoin production, IREN's capturing maybe 2–4% market share.
So it's interesting. Both are still relatively small fish in the massive multi-billion-dollar mining pond.
That's true in the grand scheme of things.
But if we look just at operational efficiency, getting the most out of their hardware, IREN seems to have a slight edge with that higher utilization in production.
Based on those metrics, yes, it suggests a slight lead in operational efficiency right now.
So what does this all mean for where they're headed? How are they positioning themselves for the future, especially with this digital infrastructure demand just exploding?
Yeah, here's where it gets really interesting, I think. The demand for data centers is, well, it's just off the charts. Global capacity needs are projected to grow something like 33% annually through 2030.
33% annually. That's huge.
It's massive, and the power demand needed for that, a 15–17% compound annual growth rate. Just the market for those giant hyperscale data centers, the ones powering the cloud, could top $100 billion this year.
Okay, so that's the backdrop.
Exactly. And this is the crucial context for why you're seeing Bitcoin miners pivot towards AI. The margins from AI services look increasingly attractive, especially as Bitcoin block rewards decline post-halving, and you've got regulatory pressures swirling around crypto too.
Makes sense. So how are CIFR and IREN specifically playing this massive opportunity? What's CIFR's move?
Okay, CIFR's strategy. They are expanding capacity, going from their current 325 megawatts up to a potential 2.8 gigawatt pipeline. That's a big jump.
A very big jump.
And they got a recent boost from launching their Black Pearl initiative early, which does have a strong high-performance computing focus. So they're not ignoring it.
Right.
Potentially, they could triple their output if Bitcoin prices really take off. But fundamentally, their strategy still feels more tightly tethered to crypto volatility.
Okay. And IREN with their more explicit AI focus.
IREN's approach is quite different, more aggressive on the pivot, you could say. Their data centers, powered 100% by renewables, are specifically optimized for AI workloads. That's a key differentiator.
Optimize how?
Things like power density, cooling, designed for housing GPUs efficiently. And they've forged these key partnerships, like with NVIDIA for GPU clusters. Those are the powerhouse chips for AI and also for colocation services, basically renting out space. In fact, IREN actually paused its Bitcoin mining expansion specifically to prioritize AI cloud services. And you saw the result. That segment achieved, what was it, 226% revenue growth in Q2 2025 alone.
Incredible.
It really positions them, as I like to say, as a preferred partner for AI compute. And their Q4 2025 deliveries seem to be on track.
And we shouldn't forget the broader crypto ecosystem, right? Things like stablecoins gaining traction. Does that help these guys?
Oh, absolutely. Stablecoin adoption brings more stability and liquidity to the whole crypto space. That helps miners manage volatility risk, makes converting Bitcoin to traditional currency faster and easier.
So both companies benefit from that baseline stability.
They do, yeah. It helps the whole sector. But again, IREN's diversified revenue, with that growing AI stream, makes it inherently less dependent on Bitcoin price swings, which are influenced by things like stablecoin liquidity flows.
Okay, so summing up this part, IREN looks much better positioned to ride the data center wave because of that deliberate AI pivot. CIFR's growth potential is still significant, but it feels more tied to the crypto market's fortunes.
That's a fair assessment, I think. The strategies point in different directions regarding that specific trend.
Now let's talk about something really specific, a crucial difference, CIFR's Bitcoin holdings. As of today, September 2nd, 2025, CIFR is holding, what is it, over 1,200 Bitcoin?
12,219 Bitcoin, yeah. Valued at roughly $135 million, give or take, based on today's price, around $111,000 per Bitcoin.
$135 million sitting on the balance sheet in Bitcoin.
Exactly. And this is a really significant point. It has a direct impact on CIFR's financial flexibility, their liquidity. It's a major asset on their books.
How so? What does it allow them to do?
Well, first, it boosts their current assets, the stuff easily convertible to cash. In Q2 2025, Bitcoin made up about half of their current assets. That's huge. It gives them breathing room. Second, any rise in Bitcoin's price flows straight to their equity through unrealized gains. This can strengthen their overall financial position, maybe offset some operational losses on paper.
Okay, so it bolsters the balance sheet.
Right. And strategically, it acts like a treasury reserve. It's a hedge against fiat inflation, somewhat against mining revenue dips, and they could potentially use it to fund expansions or even as collateral for loans down the line.
That's a significant chunk of change and a clear strategic choice.
Yeah.
But how does this compare to IREN? What do they do with their mined Bitcoin?
And this really highlights the difference in risk appetite and strategy. IREN's policy is crystal clear. They liquidate all mined Bitcoin. Daily.
Daily. So they hold 0 Bitcoin.
Essentially 0, yes. This completely de-risks their balance sheet from that direct crypto price exposure. And crucially, it allows them to immediately redirect those cash proceeds into building out their high-margin AI and HPC infrastructure.
Which fuels that explosive revenue growth we talked about earlier.
Exactly. That 326% year-over-year jump, it's all connected. So you have CIFR with this Bitcoin cushion, this leveraged bet on the price going up, but that also brings inherent volatility risks.
Right.
Then you have IREN playing it safer on the crypto holding side, using the cash flow to power diversification and growth in AI. It really underscores IREN's resilience as more of a dual play company in this evolving market.
Oh, okay. This next bit is fascinating. Let's take a look back, a sort of historical parallel. It turns out that IREN, back in September 2023, looked remarkably similar in some ways to where CIFR is today in September 2025.
It's a really interesting comparison, yeah. 2 years apart, but the echoes are there. And if you connect this to the bigger picture, it offers a potential glimpse, maybe, into CIFR's future path.
So break down those similarities for us.
Okay, first, operational scale. Back in September 2023, IREN had around 5.5 EHs. That was roughly 1.4% of the global hash rate then.
Okay.
Today, CIFR operates at about 13.5 EHs, which is also about 1.4% of the current global hash rate. So very similar market share percentage, just at different points in time, reflecting the network's growth. Both were sort of niche players focused on efficient, renewable-powered growth at that stage.
Okay, similar relative scale. What about the financials?
Financially, yeah, similar story too. IR in fiscal 23 had revenue over $75 million, but reported an EBITDA loss that's earnings before interest, taxes, depreciation, amortization of over $10 million. They were scaling, but losing money doing it.
And CIFR today?
CIFR today, Q2 2025, reported that $43-ish million revenue, but with a net loss over $45 million. So again, you see that pattern. Mid-tier revenue for their size, but significant losses associated with scaling up operations.
And strategically, were they both starting to look beyond just mining Bitcoin back then?
Absolutely. IREN in 2023 was primarily mining, yes, but the signs of the pivot were already there. They had NVIDIA H100 GPUs on order. They were having discussions about AI cloud services. It was nascent.
And CIFR now?
CIFR today has its core mining strategy, but we just talked about that recent emphasis on HPC and data centers with their Black Pearl launch. So again, both companies at their respective comparison points were in that early stage of exploring future growth engines beyond just Bitcoin.
But there were key differences too, right? It wasn't a perfect mirror image.
Definitely not. The big one is Bitcoin holdings. IREN held 0 back in 2023. CIFR today holds over 1,200 BTC. That's a major difference in balance sheet strategy.
And market cap.
Huge difference there, too. CIFR's market cap today is around $3 billion. IREN's back in September 2023 was maybe $450, $500 million. So CIFR is starting from a much larger valuation base.
Which is partly explained by Bitcoin's price itself being way higher now.
Absolutely. Bitcoin was around $27,000 back then. Now it's hovering around $111,000. That accounts for a big chunk of that market cap difference.
So connecting this back to the bigger picture.
Yeah.
What does this parallel suggest?
Well, here's the kicker. Since September 2023, IREN stock is up roughly 300%, and its market cap has surged like 14 times over.
Down.
Wow. So this historical parallel suggests that CIFR could potentially follow a similar upward trajectory if it really leans into and accelerates its HPC pivot, especially given the timing with this AI demand boom and the relative stability in the broader crypto ecosystem. It's not guaranteed, of course, but it's a powerful thought experiment for anyone watching these stocks.
Definitely food for thought. Okay, let's quickly switch gears and look at the charts. Technical analysis, what's the recent stock performance telling us? This is as of today, September 2nd, 2025.
All right, let's look at CIFR first. The stop surged today almost 12%, up to around $7.64. It's been on a tear recently, up over 30% this week, over 50% this month. That reflects the momentum from the HPC news we discussed.
But any warning signs?
Well, one indicator, the Relative Strength Index, or RSI, is up near 73. That often signals a stock might be getting a bit overbought in the short term, so a pullback wouldn't be surprising. However, another indicator, the MECD, is still showing bullish momentum, and the price is above key moving averages. So mixed signals, but definite recent strength.
Okay, and iron.
IREN also had a big jump today, over 15%, hitting about $26.50. That's clearly fueled by the NVIDIA partnership news and the strong earnings beat.
And its indicators.
IREN's chart looks strong. It's up almost 25% this week and a whopping 85% this month. Its RSI is around 63. That's considered a healthy buy zone, not yet extreme like CIFRs. The MACD confirms strong bullish signals too. All its moving averages look positive. Year to date, it's up over 70%, and the last 6 months have seen a surge over 220%.
So looking purely at the charts right now, iron seems to show stronger, perhaps more sustainable momentum without being quite as overbought.
That's how it appears, yeah. It aligns well with the fundamental story of its successful pivot gaining traction. CIFR's chart is definitely trending up strongly, no question, but it looks a bit more volatile and potentially stretched in the very near term, possibly driven more by recent announcements.
Okay, so let's wrap this up. What have we learned from this deep dive into CIFR mining and Iris Energy? I think the core takeaway, for me at least, is that fundamental difference in strategy. You've got CIFR, still largely focused on Bitcoin-centric expansion, banking on that upside, and then IREN, making this really aggressive strategic pivot into AI and high-performance computing.
Exactly. And flowing from that is the difference in how they handle their Bitcoin. CIFR holding on to it, making a direct bet, gaining that asset cushion, but also the volatility. IREN liquidating daily, de-risking, and using the cash to fuel that diversification into AI HPC.
So what's the overall assessment if you had to pick one based on this analysis?
Well, based on everything we've looked at between CIFR and IREN, I'd say IREN currently stands out with potentially higher upside in the near to medium term. Analysts are talking about significant potential, maybe even tripling in the next 12 months, driven by that AI and HPC expansion. They're tapping directly into that massive data center demand, which diversifies them away from relying solely on Bitcoin mining, and importantly, reduces their exposure to things like the halving's impact on mining profitability.
And analyst sentiment reflects that.
Very much so. Sentiment remains really strong for IREN. You see medium price targets generally in the $20 to high $30 range. And some of the parts models, looking at both mining and AI, are projecting valuations as high as $300 in really bullish long-term scenarios. It shows the market is valuing that AI potential highly.
It's truly incredible to see how these different strategies are playing out in real time. And it really makes you think about what it means for the whole digital infrastructure landscape going forward. We hope you, listening, are considering how these trends might shape the future.
Absolutely. And maybe this leaves us with a final provocative thought for you to chew on. If IREN's big bet is on becoming this preferred partner for AI compute, leveraging its infrastructure, and CIFR's potential maybe relies more on Bitcoin's price multiplying significantly, what other surprising partnerships, maybe unforeseen technological innovations, or even different strategic pivots might emerge to truly redefine success for companies operating at this crypto AI crossroads in the years ahead? It's not just about these two. What's the next evolution? Something for you to ponder.
A great question to end on. Thank you for joining us for this deep dive. We'll catch you next time on the Deep Dive.
Yeah.